You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 2nd day of September, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, just go to our homepage at CFRN.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. When you join that way, you also have access to the chat box or the discussion group so that you can ask questions and participate in the discussion. If you're out of the office and away from your desktop, point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. During this broadcast, we also stream live on Facebook, YouTube, and Twitter. Let's open with a word of prayer. Father, as we gather together today, We praise you for this day and your purpose for it. We ask, God, that you would reset our personal agendas as we come together in your name. For you assure us that where two or more gather in your name, that you there are there as well. We ask that you would recalibrate our intentions, refocus our hearts. Your will for our lives does not always reflect our plans for our lives. We ask that you today would change them to reflect your will, not ours. Help us to understand that we don't need full clarity to walk into the unique purpose that you created for our lives. In Jesus' name we pray. Amen. Okay, as I said, happy Wednesday. Let me give you the numbers from around the world. These are the cash markets, the indices, as they're called. Starting here in the U.S., the Dow is up 216 points. NASDAQ is down 7. S&P 500 up 24. Russell 2000 down 1.5. Not a mover or a shaker in the bunch. In the commodity basket, a little different story. Crude, today's inventory day, down $1.12, trading 41.64 last. That's a drop of over 2.5%. Gold down $29.40, trading 19.49.50 last. It's a drop of 1.5%. And silver, hi-ho silver, hang on to your hat. Silver down $1.05, trading 27.59 last. That's a drop of a little over 3.5%. Now again, silver down $1.05. When silver moves $1, the price of silver moves $1. If you're trading one futures contract, that represents a profit or loss of $5,000. $1 move in gold is $100. $1 move in silver, $5,000. In the Asian markets today at the close, Nikkei posted a gain of 109 points. Shanghai dropped 6. The Hang Seng down 64. And in the European markets at the close, FTSE up 78, which is a gain of 1.25%. DAX up 269, which is a little over 2%. And the CAC up 93, almost 2%. So, now, it's a strong day in the UK. Asia was mixed, no movers, no shakers. Europe, definitely a green Wednesday in the UK. Here in the US, markets are mixed, with the Dow and the S&P both green, NASDAQ and the Russell both in the red, but neither one by too much. So more than likely by the end of the session we'll find out who's on the right side of the street, because the indices, the big four, S&P, Dow, Russell, NQ, tend to travel in a pack, and the NQ has been the outlier of late, really on a tear to the upside. All the markets. Somebody posted in the discussion group last night or the night before, this directional move, just nothing but going higher, is getting kind of boring. Well, trust me, it's going to get unboring here soon enough, and we'll talk about that when we go to the charts. Let's go to Michael right now and get a recap of what happened this morning in the live training room. When he's done, I'll be back. We'll go over the Concierge Trade Alerts, the Logic 247 alerts, all that, and answers to your questions. Michael, take it away. Okay. I think Michael's not quite ready. That's all right. We'll go to a daily chart of the S&P. Yesterday, we used the Fibonacci price extension tool to measure this and draw this little rectangle. We said that would be the next spot on the upside for the S&P, when you're printing new all-time historic highs, you look left, you got nothing to base things on. You can't see where you're going to expect resistance because price has never been here before. So we have to resort to a little thing called math. In this case, 14th century math. So we ran up, we tagged that area, and that's what it is, it's an area, just as fib retracements are an area. Now, from the swing low of this last leg up, which happened on June 29th, we now have to adjust these because yesterday when we drew these fibs, we were using the swing high of the 31st, but we have a new high again. Okay, so that high is 35.56 and a quarter. There we go. That's pretty close. Okay, so now that we have that new swing high, we can see that the BBC, that's bull bear cross here on the daily chart, lines right up with that shallowest Fibonacci retracement, 24% fib. We will return to the BBC. Price always reverts to the mean. If you look back, you get a leg and a retracement, then a leg and a retracement, a leg and a retracement, then a big leg. Okay, now this was a big leg, but it doesn't compare to the one that we're on right now. This has been cooking since June 30th, and here we are, September 2nd. Now, we have had, as in the early stages of this incredible bull run, probably the strongest in history, against a backdrop of riots and an election, and a pandemic, and a crippled economy. Does this make rational sense? No. But it is what it is, and you got to trade what's in front of you. So in the early goings of this run, we had pullbacks along the way to the BBC, but the last one we had was here on July 30th. So the entire month of August, no pullbacks to the BBC. And yesterday we had said that if price got below the step line and below blue and climbing, we had about a 50-point area before price would actually complete a pullback to the 24% fib and the BBC. But because we have higher prices, because the BBC has risen, we have a new all-time swing high there. This window of opportunity is shrinking. So we would want to get below that support on the daily chart, below that low, this low, right here, below blue and climbing, below the step line. And so from roughly 34.64 down to 34.20. So it's about 40 points between the top of the window of opportunity and the bottom of the window. That sounds like Michael right there.
Yeah, I've been here for a few minutes.
Okay. Yeah, when I called earlier, I didn't hear from you, so I just figured you were on your way. But if you're ready,
yes,
you can take it away.
Okay. All right. Let me just delete that. Delete that. Show that.
Tesla having a rough day today. We'll take a look at that on the chart later in the show.
Okay. There.
Okie doke. All right, you're locked.
All right.
Take it away.
Excellent. Here we go. If you have, if you want to become part of the CFRN family, go to eminifuturestrading.com and just follow the instructions there. Okay, eminifuturestrading.com. Just follow the instructions. Now, the spreadsheet. Let me go through that. Here we go. If you're going to read the spreadsheet, you can read all CFTC risk disclosures down at the bottom. Today is the second day of September 2020. Wow. Today we made 6 ticks on the euro, 1 tick on crude, and 50 on gold. That put us at plus 547.5 on the morning session. Today it took 1 minute and 2 trades to get to the goal for the day. At that point, we're up $100 a contract. Did I write that down? 1 trade in 2 minutes. I wrote it down backwards. Hang on. This needs to be a 2, and this needs to be a 1. 2 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 11 trades. So on the month, we're only on our second day of the month right now, but we're up $9.95 per contract per 2-hour trading day. That's averaging $497 per contract per 2 hours. I am now on my 138th consecutive day of getting the goal. And on the year now, we're at $64,451. That's over 163 trading days, averaging $365 per contract per 2-hour trading day. Now, again, if you want to become part of the CFRN family, simply go to eminifuturestrading.com. We've made it much simpler to become part of the family. So go to eminifuturestrading.com and follow the instructions. Okay, now I'm going to go from this side to this side again because, well, we only had 1 trade here, 1 trade here, 1 trade here. And 8 trades in gold, and that's just scratching the surface. If you were doing the YBR trades today, you should have done really well. There were a bunch of really good ones. But let's just scroll back here to the beginning. Okay, this was my one trend line trade that ended up being break even. I could have locked in some profit on it. I should have locked in some profit. I had put a target up here, but it didn't reach my target and it took me on a break even. There was another trade right here that would have been a momentum short trade, and it would have been a break even trade. There's YBR trade right here that would have worked out. This right here now, as far as the trend goes for the room in the morning, I didn't like it right here, but doing the YBR trades, there was a nice long trade right here that you could have gotten into, and again there, and again there. Moving along, there was a shorting opportunity right there, long opportunity there and there, and YBR trades. Actually, this wasn't because the cycle was going up too steep. But there was a trend line trade right here to capture that, and nothing that you could have done right in here. And then we got into the break. There was YBR short right here during the break. And it looks like over here, you see, you got to look at the slingshot. And the slingshot's what's going to tell you what's going on. It just didn't, it was a slow grind up, and the slingshot was showing that it was just grinding. Okay. And that was the ES today. And crude oil was a bitter disappointment. Yeah, one more time. It did actually give a couple of decent trade setups. I only took 1 trade in crude, and it ended up being a break even. My number on crude for the week is 43. 43 even. But let's see. Yeah, see, there was a trade here that I missed. No, I took 1 trade on crude and I made 1 tick on it. I don't see it right now, but it was probably like right in here. Yeah, I think that's where it was. Right in here, I believe. So it ended up being like that. There was another trade here off the BBC. And, in that one off the BBC right there was actually our highest probability trade. Where price pulled back, it actually hit the BBC. The MA1 stayed the right color, and the cycle was the right color with bearish separation. And that was it for crude. Now, we'll go through the euro. Okay, so the euro had a lot of pre-market movement, as you can see, but once the markets opened up, we had one trade here we picked up 6 ticks on. We had one here I missed, another one here I missed. YBR long trade there, YBR short trade there, YBR long trade there, YBR short trade there. Yeah, this would have been a YBR long right there. It wouldn't have worked out. That one would have stopped out. But that was during the break. And another YBR short right here. That would have just worked out. And that was the euro this morning. We ended up with +6 on the euro. Now gold. Oof. Now I'm going to go over the trades that I took. And I'll point out some of the obvious ones, like the YBR trades that happened. But to go over every trend line trade, it's Wednesday. And I think we have Dr. Tom coming on today, or maybe Greg. But it would take a long time to go over every single trade. Now, let's see. This is where we got our goal this morning on the very first trade. I went short right there, and I know the cycle was going up a little bit steep, but everything looked really good. And there was another one right here that had happened, and I missed it. There was a bounce right here that worked out just fine. Then we had a break-even trade there. YBR trade right here. Another one right here that didn't work out. Another one over here that worked out just fine. The cycle was going down too steep on that one. And it was going up too steep on that one. This one would have worked out just fine, followed by that one. This one would work out great. Then right here we had picked up 5 ticks on this to get us to +15. Then 20 ticks on this to get us to +35. And this was a break even. And the YBR trades I skipped over a couple, but there was a beautiful one right there. Now that was also a bounce off the BBC. Okay, they overlapped. And this one right here, we picked up 12 to put us at +47. I think that's the order that it was. Now this one was a YBR trade and a BBC trade and a 128 trade all at the same time. Now, and I know that there's some that I missed. This one here, I think I forgot to record that one. But we had, this one was a break even. This one right here, I picked up 3 ticks to put us at +50 even. And you see how high it went. I was expecting it to go just a little higher, but I was locking in my profit just a little bit. And that was the last trade that I took. Then we get into the break, and right here we have a BBC trade. It was a bounce off the BBC. It was really nice trade right there. This would have been a trend line trade right here. Okay. Yeah. I'm looking at the slingshot down here. You know, we had another trade right there. And another one just happened right here. That would have been enough to get your stop to break even. But that was the morning session today. Now, if you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today is the 2nd day of September, 2020. Today we took six ticks in the euro, 1 in crude, 50 in gold. I think we actually did 150 in gold, but I was doing both types of trade setups this morning, but I was only counting the ones that we normally do in the room. So we're up 547.5 using those. And today it took 2 minutes and 1 trade days, averaging $497 per contract per trading day. And I am now on my 138th consecutive trading day. Okay. Now, if you want to become part, and with that, we can pass it back out to fabulous Phoenix, Arizona. Studio A overlooking south.
And there we go.
There you go. You have.
All right, guys. S&P took a dip during the session. Oh, recap of the recap.
Today it took 1 trade in 2 minutes to get to the goal for the day. At that point, we're up $100 contract.
Well, the market has certainly handed us some incredible moves here of late.
Yeah,
now we're just off the high of the session. This is one of the strongest bull moves in the history of the markets. So, with that said, let's take a look at what's going on. Last week, week 108 of Logic 247, we had just 55 alerts. With Logic, an alert is based on opportunity presenting itself. And when opportunity doesn't present itself, there's no alert. Or there can be opportunity, but if that opportunity has an obstacle in its path, then it's really not such a great opportunity, and therefore it does not become an alert. So 55 alerts last week. 6 never triggered, 1 carried over into this week. So we had 48 actionable alerts last week. 4 of those were stopped out. 8% of actionable alerts. That's not a typical number. What we've averaged over the last 108 weeks is 20% being stopped out. Now we're in week 109, and as of 12 noon today, we've got a total of 27 alerts, 2 never triggered. That gives us 25 actionable alerts. 1 of those was stopped out so far based on not risking more than $300 per contract per trade, less when possible. So that represents 4% of actionable alerts being stopped out. Again, not a typical number. Typical is 20%. Now, the Logic alerts are issued in the private Telegram channel. We start Sunday night at 6 p.m. Eastern, and we continue around the clock right up until Friday afternoon at 5 p.m. Eastern, when the markets close for the week. Those differ from the Concierge Trade Alerts. The Concierge Trade Alerts come out as a static report right after the Globex open each evening. And I'll bring up last night's alerts so that you can grab a screenshot if you'd like to. There we go. So last night, 6:25 p.m. Eastern, September the 1st. There's the S&P, the Dow, the Russell, Crude, NQ, 10-year notes, gold, Canadian dollar, euro, British pound, and silver. Okay. And the way to deal with these, since this report comes out once per session and the numbers are good for the entire session, what most traders do is they just take the number, they go to their chart, they put a line in the sand, long side, short side. Everything that happens in between the two numbers is price sort of making up its mind what it really wants to do. So let's go to the S&P 30-minute chart. We're right here. All right, so last night's alert was to be long 35, 32. Now, price reached back for that trigger at 35.32, but it didn't quite make it. We had support at the BBC, bull bear cross. It's real simple. Green line is called the BBC. It stands for bull bear cross. When price crosses below the green line, we anticipate lower prices. And then when price gets above the green line, we anticipate higher prices. Lower, higher. Now, this pullback to the BBC, the pullback holds more often than it doesn't. While this pullback looked, as it was happening, as though it wasn't going to hold, it did. This candle still connected to the BBC. I talked yesterday about how moves are exaggerated, like over here, when price pulled back into the weekly trading zone, and where we had previously had a bullish cross. Those are both two things where we say, well, price should hold here. With our strategy and our indicators, you always know what the next high probability move is. Doesn't mean you know the future. That's two completely different things. Lots of people promise you that they know the future, and then you find out they really don't. We just tell you up front, we don't know what's going to happen next. But we do know what the next high probability thing is. So when price pulls back like this, into a weekly zone, into a previous bullish cross, well, we expect that to be support. Doesn't mean it's always going to be support, but it is the high probability thing. And it was. But look at the wick on this candle. It reached, probably better than halfway, or at least halfway down to the weekly zone below. That's a little bit unusual. Okay. This pullback here, spiking the BBC so hard, and then doing a reversal, then here we come again. The price really had to fight to get through red and falling. Now, blue and climbing, the technical term for this indicator is the CFMA1. I refer to it as red and falling, blue and climbing. Red and falling represents bearishness or resistance, whereas blue and climbing, bullishness or support. So when price pulled back to the BBC here and then reached back for the trigger, the important price, important area, buyers came in and took it right back up. So that a little unusual, but not in the context where we anticipate that these triggers or these alerts will trigger multiple times during the trading session. Sometimes we see 1, 2, 3, 5, 7. Just depends upon market structure. Yesterday we had 1, 2, 3, and now today the number is 35, 32. Okay. And so this first little run up took us to 35.41. So 9 points, $50 a point, $450 per contract traded. Just the first little move. And then we pull back to the trigger, but we don't quite go below it, do we? Nope. Right on the nose, 35.32. So up we go. We run into red and flat. So we get a little bit of a resistance consolidation. And then we get on the north side, and red and sideways comes back to blue and climbing. And the swing high was 33.56 and a quarter. So 56 minus 32, that's 24 points at $50 a point. That's $1,200 per contract traded. $1,200 per contract traded. When price could go no higher, resistance. And remember, you can't look left for any help because we're in unexplored territory. Price pulls back to the BBC. Buyers come in before we can get all the way to the trigger. Up we go, back above the BBC. We pull back, and again, we spike it, but it holds. The pullback holds here. Pullback holds here. But again, live in real time, you're thinking it's not gonna. You're thinking, with this much red candle, you're at least going to get back below the trigger, but in this case, we did not. Now that previous swing high was 56 and a quarter, and this high is 57 and a quarter. So we've put in a 1 point new high. Always be suspicious of a nominal new high. Okay, this could easily become a double top here on the 30-minute chart. If we can comfortably get above this, maybe a couple points higher, so that we're like 3 points above this swing high, then we'll have an alert in the logic channel, most likely, which takes us up into the highest weekly trading zone for the week, which is 3569/3570. Now last week, we traded above the highest weekly zone. Looks like we could do that again this week. That's very unusual. We've been publishing the zones since December 14th of 2009. And almost every week we see price close below the highest or above the lowest weekly trading zone. There have been weeks along the way where what happened last week has happened before, but certainly not the norm. Now, with today being Wednesday, I want to make sure I have all these weekly zones updated. So we've got 69/70 overhead. Again, that's the highest weekly trading zone for this week. Below that is 25.26. And below that is 18/19. Almost not room to get them in there, but follow the formula. And whatever it is, that's what we print. So, a little crowded there, but those are the numbers. Okay, and below that we got 34.99/3500, and below that 34.86. So those are all current weekly zones. Got one more zone overhead. So, is this the end of the road? I don't see any indication of it. If you look at Tesla, you might think that's a different story, but here we sit. From the entry. Now, we had an exit signal early on, okay? but this wasn't an extended move yet. The exit signal comes into play once you have an extended move, and an extended move typically under normal market conditions would be anything in excess of 5 points. But this move here from 52, I mean, under current conditions, that's really not an extended move. Under normal conditions, it would be considered. But what you're looking for is when this step line gets on the right side of blue and climbing, when it crosses over, like it does right here, you're looking for the first red candle that closes below the step line after it crosses over. So if you had taken profit on this first move, you might have waited for price to take out this swing high. Once we're back, right in the back of blue and climbing, we take out this swing high, and then that takes us right up to that 35.56 and a quarter. Pull back. Question is now, are buyers committed enough to their positions to take us up to the highest weekly zone at 69/70? We'll find out as the week progresses. Now, I said you draw 2 lines in the sand. Obviously, there was only need for 1 line in the sand today because we had just a directional move. Some days we do have 2-sided action. $35.12 was the short side. So you might just make note of that number in case something happens today that sends the markets in the other direction. So see, anything between the 2 lines is the market making up its mind which direction it's going to take for the session. Logic alerts will usually give you something to trade as you move between these lines. And then once you hit the long or the short side, then you want to be long at 35.32. And above 35.32, you only want to be looking for long trade setups. Okay. All right. So that's the S&P. Here's the Dow. $28,440. Okay, that's this week's zone. 595 is this week. 735 is this week. And that was last week's highest zone, 28,800. This week, that number becomes 28,860. Now again, these numbers go out Monday morning, 6:15 a.m. Eastern, to all of our members, and we've sent them out every Monday since December 14th of 2009. So 28,860. Okay. All right. And these numbers down here, we won't concern ourselves with. I'll clean those up tomorrow. These are previous weekly zones. The price consolidating at the zone, moves up to the next zone, consolidates, moves up to the next zone, consolidates, zone, back to the zone, up to the zone, and then overhead. The highest weekly zone this week for the Dow, 29,315. So still plenty of room, and we've still got 2 more full days, Thursday and Friday. Next Monday is a holiday, so we won't be here. The markets will be closed. 29,315. Okay. All right, so the Concierge Trade Alert last night for the Dow was to be long 28,670. Go. Okay, from 28,670 up to the zone overhead, 735. about 40 points, $5 a point, $200 per contract traded. The swing high of the move was 28,909, so we'll call it 28,900. So that's 230 points at $5 a point. That would be $1,150 per contract traded. Now the Dow's doing the same thing as the S&P, double top. Whereas the S&P put in a new high, nominal new high, the Dow has not yet managed to do that. So let's go to the Russell. Okay, 94, that's at this week's zone. 87. 78, 79, that was a last week zone. This week that number became 74, 75. And below that we've got 65, 66. Okay, now the alert last night for the Russell was to be long 1582. And the initial swing high was 84.80, almost 3 points. So a 2-point move in the Russell at $50 a point, that would be $100 per contract traded. Price got back below the trigger, did it again, went to the zone overhead from 82 to 87, that's 5 points, $50 a point, $250 per contract traded. And then price pulled back, found support at the step line in blue and climbing, and then we rode the back of blue and climbing to 1591. So that's from the entry to the swing high is a 9-point move at $50 a point. It's $450 per contract traded. And the exit signal would have been that little red candle right there. Step line is climbing. Now, on a strong directional move, the step line will be on the left side of blue and climbing. This is just kind of on top of it, but you can see it still steps over and steps up and steps over and steps up, and then it steps over, this red candle that closed below the step line. Closing price 1587.4. So if you were waiting for the exit signal, it was a nice 5-point move, $50 a point, $250 per contract traded. And the short side for the Russell, 1567. And it looks like we just spiked it. The swing low was 1567.2. So it came within 2 ticks. Came within 2 ticks of hitting the short line in the sand. The buyers swept in and took it away. Had price dropped any lower, we would have anticipated support at the zone. End zones are in the area, so basically that's what we got. Had we spiked below the zones, then this bullish cross, we would anticipate that to be support as well. So the question here, at a leg or retracement, are we going to continue the leg up, or are we looking at something different? Leg, retracement, another leg to the downside. That's a great question. As long as we're on the north side of the BBC, the bull bear cross, as long as we're on the north side, we anticipate higher prices. If we consolidate here and get back below it, then we're looking for lower prices, which would take us back down to the zone, just like this move did right here. In a leg, we retraced back up to the BBC where we found resistance. That's what we anticipate. That resistance sent us looking for support, which we found at the zone. Again, that's what we anticipate. Now, the question is who's more committed to their positions, buyers or sellers? If it's buyers, then we'll see 87. If it's sellers, we'll most likely see 75. So there's nothing to do on the Russell right now, but to just kind of wait and watch and let the chart dictate your actions. Bearish cross took place right in this area right here. So let's go look at the NQ. All right, looks like John has joined us, so we'll pause the recap right here, and I'll get your mic open, John. And then we'll finish the recap after we talk to John. Hang on, John, I'm gonna get your mic open. John, looks like you're muted on your end. You need to unmute yourself. There you go. You got an open mic now. John, welcome to the show. Okay, no John. John, your mic is open. Okay. Ring him on the phone, let him know his mic's open. Hey, your mic's open. No, I don't hear you through the headset.
I'll just go out and come back in.
Okay, all right. Yeah, let's give that a try. Okay. All right, John's gonna exit and re-enter, and we'll see if it works this time. So while we got the NQ up, the Concierge Trade Alert last night for the NQ was to be long 12,341. Okay, John, try it now. Yep, you're unmuted on my end. I don't know what's wrong. You know, there's a number you can dial in on, John, where you... Oh, I just heard a noise. Oh, there you are.
Hello?
Yeah, I hear you now.
You got it?
Yep.
Okay, great.
What was wrong?
There was some kind of an update on my Microsoft last night, and maybe
okay.
Things up. So.
Gotcha.
Yeah, I actually feel pretty good because, and hopefully somebody benefited from our call. We just, we nailed the top of the gold and silver a couple of days ago. And said it would turn down, and it certainly turned down. It's accelerating lower right now, and frankly, it looks very, very negative indeed at the moment. Given where we are, being down more than $1 on the silver, and $37 on the gold. That's quite a sell-off. Now, the market was up overnight and held its gains all through the night. This time around, I guess the miss on the ADP probably spooked the market a bit, and that's what provoked the selling right from the get-go. So we had a kind of a classic reversal sort of thing we've been looking for, which was a kind of a super bullish open, higher open. The market decided to sell pretty much everything off, including Zoom, and Tesla dropped yesterday, a bunch, and it dropped more right away today. However,
Here's Tesla on a 30-minute ratio.
Yeah, so we've put in a pretty good spike here. You remember we said it might come back to 400. Well, that was in the bad call yesterday.
Yeah,
so,
good call.
I think that's actually given Tesla some room to have a bit of a rebound right now, and the market, the Nasdaq itself, didn't really get too hammered. And it was down 100 briefly, 100 or more, and it's come back, and the S&P's hitting new highs. So we're seeing the shift in, the Dow's up 260 points now. The S&P is very strong. So, we're seeing the Nasdaq underperform, and the Dow and the S&P starting to overperform. Sorry, hang on a sec.
Go ahead. 12,341. Okay.
So, the possibility of going back to the highs from here cannot be ruled out. However, if we were to roll over around about here and start going down again, that could be a problem. And so I'd be aware of that. I'd be ready to act on it if it happens. But don't forget, we tend to rally into Labor Day holiday, and the employment numbers may actually be better than expected when they come out. So that could sort of end up being a strong Friday. This is just the first pullback this is the first pullback from a new high. So generally speaking, you buy the first pullback until proven otherwise. So you have to, especially if the Dow continues this strong, there's a pretty good chance the Nasdaq is going to go back and at least test the highs, and then we'll see what's going to happen. But for the first time, we're starting to see a few cracks appearing in the dam, where Apple is actually down for a day. I haven't seen that in a while, and some of the other stocks got hit, especially the Zooms and the Z's, and the UVs continue to be quite fairly well bid, considering where they came from. It was around about the 20s, and we're at 23. So they've delivered a pretty good gain for anybody who bought that weakness, and they're basically holding a pretty
UVXY.
Yeah, they're holding a pretty good insurance policy at the moment. So. Yeah. However, if that thing sort of breaks its little uptrend here and goes down again, that would be a logical thing for it to happen, because it would potentially put in a better bottom. Maybe for more of a sell-off next week. I think after Labor Day, there's a higher possibility of a sell-off than today. And at the same time, we had a very strong market after the close, all through yesterday and after the close. So we were sort of getting a little bit overdone, very similar to the mid-February high kind of behavior. It's going to be interesting to see how the market actually unfolds next week, where, if we have a bigger dip or the start of of some sort of a pullback. Trump's numbers are getting better. The Rasmussen's up to 49 today, which is a good place for him to be. The Zogby is showing a 52%, and very high numbers on the Hispanics and the African American and other votes. They all look very good. So, and you know, they're saying that the Dems aren't putting any polls out anymore because they've all gone favorable to Trump, which you know, since they got a much, you know, sort of a hidden response, the massive viewership of the Republican convention and much better, you know, coverage than they thought, and potentially better polling numbers too. Most of the swing states have gone in his favor, so I guess it's one of the reasons why the market's been as strong as it has the last few days.
Here's an interesting comment. A 2020 election poll indicates that voters either believe the race will shift back to Trump or that the polling is wrong.
Mm-hmm.
Okay, that's some pretty good double speak, I guess.
Yeah. Well, you know, you got the deep state and the media, you know, fake news and everybody working against you, and they got a lot of power, and they managed to kind of fool people into thinking that Biden was way ahead, and it could well have been, you know, much
I thought
less.
the interview he did with Laura Ingraham was quite good.
Yeah, not bad. He could have used a different wordage in a few instances.
Yeah, there was a couple of spots.
Yeah. Anyway, the way the gold and silver is looking right now, you have to, you know, you certainly have had a pullback. You know, we have to see if it's going to put in a decent kind of a bottom where it can. I mean, it looks pretty bearish right now. You have to admit, right? The way it's set up, and and you know, it certainly looks like it could. It might return tomorrow or over the weekend or something. You know, it might come down to a little bit more before it can put in sort of an upside reversal. Kind of looks like it could come down to about 1800 on that indicator, and it looks pretty similar on the silver. So we'll have to play it by ear. But you know, just remember we had a very big sell-off from the 2000 the last time, and then it kind of went, you know, kind of rallied up again. So it's not necessarily, just because it's down today is not the end of the world by any means. Although we do have a big monthly doji, and that's a big of a problem. So that's bearish. Yeah.
If we take out all of that doji, then we may have a full-on retracement that could take us back maybe to 1600.
Yeah. The as far as the vaccine stocks probably are close to bottoming today. Some of the vaccine stocks are just beginning to turn upwards. mRNA actually is looking like it could be a buy here and maybe reversing. So it's got its work cut out for it. I kind of like BNTX. It's a pretty good bellwether. It's one of the big. It's the one that's in partnership with the German. Pfizer, I think, is the one. Incidentally, there's somebody else is coming out with a very rapid test. See what I mean about BNTX? That kind of looks, you know, I think with these vaccine stocks, I mean, you see the last time we had a doji, and then we had a sharply higher opening. So I'd say the odds of this stock bouncing from here or actually starting a new uptrend fairly high right now, given what's going on today. And the fact that the vaccine stocks are turning upwards in a kind of a down market. And I mentioned yesterday, Google is starting to hit new highs, and it's actually really strong today if you want to take a look at it. And Twitter as well is up a lot. And we did.
Here's Google.
Yeah, I mean, look at that. It's actually gapped higher and is going higher. And Twitter, I think, is the same. And I think Twitter is kind of considerably undervalued basis Facebook and some of the other things which we mentioned, you know, recently as it was breaking out higher. So this is a big move for Twitter today. It's the first time we've seen an authoritative move for a while in this stock. and I think we're hitting new 52-week highs, but it looks a bit too. So it's starting to get more attention. The rest of the, in spite of the Dow being higher, Boeing, BA is not performing that great at the moment. But I'd be inclined to be ready to jump on Boeing in the next few days. On any kind of if it starts to take, you see how you can see those last couple of days highs. I think if they're taken out, this thing could actually go for a bit of a run here into the fall. Assuming that we don't, if we have a really bad sell-off, all bets are off. But given the way it's basing out, it's been struggling to get some traction. But I think one of these days it's gonna get it. The news hasn't been that bad with Boeing. They've had a few orders. Their planes, they're back in production on the Max and things, and they're probably getting their act together slowly but surely.
Considering all that happened with Boeing, they've held up pretty well.
Yeah, and look, this thing, when it gets going, it really, look at the two rallies we've had already, which we called both of those ahead of time, and they were pretty incredible rallies. They were pretty fast, and if you got in, you had a great run. So let's take a look at Zoom, ZM. Yeah, it's actually
that gap.
Yeah, that's actually quite a positive development, where it pulled back and sort of tested the lows, and now it's going higher again. The numbers on this company are just nothing short of staggering, so they certainly justify that big jump. And these other high flyers like Docu, remember the Docu, that's in the same league. DOCU.
That's DocuSign, right? Is the company? Yeah.
And then the other one is TTD.
Trade Desk.
Yeah. It's interesting. Look at that stock. It sort of got hit this morning, and it's already hitting new highs. It's kind of like the ability of these things to come back is incredible. It's almost like it's like Tesla. It gets knocked for $100, and right away the buyers come back in near the low end of the range. So
yeah, interesting.
So let's have a look at Apple, Dwayne, just to see how that's going.
There we go.
Yeah, it's a big outside day today, so
yeah,
that's
bearish engulfing. That's
big deal.
That could, this
could
market
be
is we don't use terms like overbought and oversold. I don't that much, but this market, just in general, is really overdue, whatever that means. Okay, for a retracement.
Yeah.
The S&P, in the last retracement of any, since really July 30th, right here, we pulled all the way back to the BBC, but we closed bullish on the day, and then we only have 3 red daily candles in the entire month, but even those red candles did no damage to the up move. It just kept moving higher.
Can you put up Baba?
Alibaba. Yeah, we haven't looked at that in a while.
Yeah, I just thought to check out the Chinese, see how they're doing. Yeah, a little bit of a pullback there today. Meli, M-E-L-I. Yeah, so, and Amazon. still at a new high today. So, and actually, it sort of still looks like it's going a little bit parabolic, that Amazon. The fact that we're not selling off very much from the staggering sort of high level is very, very impressive. Baidu.
Okay.
Yeah, it actually looks like a short, that Baidu. I think if we
They're having an outside day too.
Yeah. By the way, the metals look, they're just hitting new lows again, Dwayne. So they're really under pressure today. Oh, the other thing I mentioned, remember I mentioned the bonds were going up last couple of days. I mean, this was kind of a tip-off. The trouble is ahead, and certainly is delivering now. On the 30-year bond. And the other thing is, I guess the dollar bottomed out the last couple of days too. See what I mean about the dollar? The way this thing is heading higher.
This is the bonds.
Yeah, if you look at the daily, is this the yield or is this the actual bond? This is the.
It's the actual bond, I believe.
The actual bond, yeah, right. Yeah, see, I mean, that's a pretty big deal, that rally here. So.
Is that right?
Something's wrong with that, but.
Yeah, I think so too.
Yeah. Oh, the other one is the oil. Check out the oil that's tanking. That started out strong today, and that's getting hit. Yeah, it's actually kind of been gearing up for it the last few days with the kind of a lower, just edging lower for the last couple of days, and then bang. So.
Yeah, here's crude right here. Our alert last night on crude was to be short 42.90.
Good job. That's a great entry point. Wow.
That was the Concierge Trade Alert, 42.90.
Yeah.
So that thing's dropped, well, from 42.90 to 41.90. A $1
And I guess
the
the Nasdaq put you short this morning on the same sort of thing.
Just briefly, just briefly, and then it turned around.
Yeah. Okie doke. Well, listen, thanks very much.
All right, John.
All right.
Yeah,
all the
so
best.
we were short for about 66. The alert was at 12,238, and so we dropped about 66 points, and then it recovered. All right. Have a good one, John.
Much better.
All right. Talk
You
to
too.
tomorrow. Okay, so that's where we were. We were in the NQ. The alert was to be long, 12,341. So we had a 76-point move higher, and then we got low blue and climbing, and overcoming. It just shows you how bullish the market is. So the entire move up to the swing high was 124 points. Now 124 points at $20 a point. It's $2,480 per contract traded. Let's move to the south side. 66 points at $20 a point. That's a $1,300 per contract move. So we're triggering on the long side again. This trigger here was of no real interest because we're below the BBC, below red and falling. And until this candle completes, if the next candle, which we'll get in 14 minutes, if it opens above the BBC, then we've got a potential obstacle right there. And we may hit that obstacle before we get a new candle. And so once we're on the north side of this bearish cross, then there may be room for an alert in the logic channel to take us back up to challenge the high. We'll have a look at that. Okay, so, and then crude, 42.90, has $1,000 per contract move. Gold, last night's alert was to be short 1972. That was right here. So 1972. And that thing just triggered over and over and over and over. Important prices, important areas, almost always tested. So we dropped to 65. That's a $700 per contract move in that, just in that 130-minute candle. And then we pull up to the BBC, find resistance, sends us back down to the zone below. And then some wide-ranging consolidation, quite volatile. I mean, this little range got 79 on the upside, 62 below, and then 79 down to 62, back up to 76, and now down at 42. Big money move from 72 to 42. That's a $3,000 per contract move. 30 points at $100 a point. $3 grand. And last but not least, silver. Last night's alert on silver was to be short 28.15. And we dropped, well, the zone below us was 27, 28.15, 27.60. $28.15 to $27.60. Now remember, a $1 move in silver, a $1 move in the price of silver is $5 grand. Okay. And this week, as we already covered so far, on logic. We're in week 109. We've had 27 total alerts so far. 25 actionable. 1 stopped out. 4% stopped out. Now, the concierge alerts come as a static report at the beginning of the session, but the logic alerts come around the clock as opportunity presents itself, just like this. And we go back to Sunday night. That was last week. And Sunday night, it went carryover on gold, and then S&P, Dow, Russell, NQ, crude, silver, Australian dollar. Now we're into Monday. Dow, Russell, gold. No trigger there. No trigger there. Stuff out on the Russell. And that brings us right up to today. Right there. Good word for the day. I've been talking the last few days about your dream house. Revelation 7:15 says, "They are before the throne of God and serve him day and night." When you think about your dream house, 2 more questions arise. How close is it to where I work? Have you ever wondered what we'll actually do in heaven? Since heaven will be paradise regained, Genesis 1:28 says, God said to them, be fruitful and multiply, fill the earth and subdue it, have dominion over every living thing that moves on the earth. The Bible doesn't provide specific job descriptions for what we'll do in heaven. I don't think we'll be hanging out on clouds playing a harp, but let's hope not. But the first paradise gives us two important clues. When God spoke to Adam, he said, be fruitful and multiply. So perhaps you won't have to struggle to make ends meet. You won't live with crushed hopes and disappointments. Every dream and creative idea you have will be fulfilled. The second thing we get out of Genesis is have dominion over every living thing that moves. The word dominion means to rule over. So we'll be promoted to positions of leadership and management, but here's the difference. In Paradise Lost, God said to Adam, Genesis 3:17, cursed is the ground for your sake. In toil you shall eat of it all the days of your life. But in Paradise Found, God said, there shall be no more curse. Revelation 22:3. Gazing up at the stars one night, a little boy said to his dad, if the wrong side of heaven is so wonderful, what must the right side be like? So here's the question. Where will you spend eternity? Are you sure? You can be. 1 John 5:13, these things I have written to you who believe in the name of the Son of God, that you may know you have eternal life. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.